And welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, prop firm trading, building expert advisors for the MetaTrader 4 and MetaTrader 5 platforms, and in general, just kind of showing you what is going on. This is my first educational video that I'm going to put out. This is on the USDJPY carry trade. And if you're familiar with foreign exchange trading is the USD and the JPY is the dollar versus the Japanese yen. Now, I do want to, since we're going to be talking about briefly about putting money at risk, I do want to talk about this really quickly, just because there are risks with trading Forex and you need to know about them. This channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration at this time. I have held NFA registration in the past. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. And here's the CFTC risk disclosure. The Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. So with that, let's go ahead and get straight into what we're talking about so far. The USD JPY, the dollar versus the yen carry trade is. I pulled this up just to illustrate it a little bit more, and then I'll show you exactly what I'm talking about in TradingView. First, the way you do this is that you borrow yen. You go out and take a loan and take it out in yen from a Japanese bank. And then which is typically near zero or low interest rates. And then you convert it to dollars. You take your borrowed yen and buy US dollars with it. And then you invest in US assets and park it in USD higher yielding instruments such as T-bonds or a high yield savings account. And then you collect the spread. The Bank of Japan actually pays you to hold this. So that's how the carry trade works. We'll show you exactly the dynamics of it now. Is this the chart? Yes, this is the chart. First, here's the, what have we got here? That's not what I wanted to show. Let's go ahead and show this. The dollar versus the yen. Where is it? It's right here. So this is the dollar versus the yen. What is happening in Japan right now is that Japan has had a about a 236 debt to GDP ratio as a country for about 10 years now. What they've been doing is, I think, longer than that. I know they started getting into the carry trade type scenario because they're a major exporter. They want to keep the yen as low as possible. But the economy has been shifting on that lately. They're not as much of an exporter as they used to be. I think a lot of that has been handed over to China. A lot of the manufacturing has been handed over to China instead of Japan. So it's in the 80s, everything was made in Japan. Now everything's made in China. But what has happened is when you spend 2 to 3 times more than you are bringing in, which is essentially what the Japanese government has been doing for decades now, you tend to stagnate the Japanese economy. And that is, we're on the same path here in the United States, just slower. We have the 1.25 debt to GDP ratio, or the U.S. government is currently spending 1.2 times more than they're bringing in, 1.25 times more than they're bringing in. So we're on the same track right now, and I think most countries, most Western countries in the world are. Nobody knows what's going on in China because it's China. They don't tell anybody the truth. That the communist regimes typically do that, and I've read The Art of War, and one of the things that it states in The Art of War is the base of all warfare is deception. So keeping that in mind, I take Chinese economic data very, very lightly. But here we go. This is the instrument that we're talking about. These are periods of intervention in the Japanese bank when they've tried to lower raise the rates in Japan. Or to manipulate the bond market so it seems like it's raising rates in Japan, and then we have a collapse in the dollar versus the yen. So what we're looking at here is the trade instruments. This is the US 10 bond yields being compared. The blue one is the US 2-year yield. The red one is the Japanese 2-year yield. But the one that we watch in Forex is this one. That is the 10-year yield for the USD, and then here is the Japanese yield. So as you can see, this is the weekly chart. So this has been going over time. Now, and during COVID, when everybody's freaking out, banks were freaking out, governments are freaking out, everybody's freaking out, they lowered interest rates in the United States almost to zero. And that whittled down a lot of the carry trade. But if we go back here to the, let's see, 2008, 2009, let's go back before that. Oh, that's all the data we have. Okay, we can't go any further than that. Oh, well, what a lot of major corporations do is they take part in this this carry trade instrument because that allows them to basically earn free money and without expending any labor or expending anything else. But what we're seeing here from, let's say, 2022, when it started widening again, when everyone was calling for the carry trade to come together here, in 2022, a lot of pundits were. Now we're looking at it coming together up here because Japan has no choice but to raise interest rates right now. Bond yields are going through the roof. They're going to be raising interest rates in order to try to get some economic growth going again. And here is the difference in that. Let's look at the. We saw the 2-year. There's virtually no difference between the Japanese 2-year and the American 2-year. Now let's go to the 30. Back up here, and we'll go to the $30 right here. Okay, this is and this needs to be the Japanese 30. These are also coming together very, very closely. So the Japanese carry trade is actually unwinding right now as we speak. Have I got the right ones in there? I don't. That is the 10-year. Pardon me. I need the 30-year in there. There we go, that's better. Whoops, except this one is the Japanese 30, and this one is the US 30. That's not one to play, huh? $5.10. Japanese 3401. Okay, I want that to be blue. Well, anyway, this is that's basically what is going on with the carry trade between the two. Is that the 2-year is there? We go. Japanese 10-year, 401, and this one up here. Change that to the 10-year, US 10, right there. I may have, oh, that's not it either. That's the, well, you get the idea. The difference in the interest rates is what makes the carry trade work, and we're starting to see that unwind a good bit, especially when we go back to the, back there, especially when we go back to the US 10, right there, compared to the Japanese 10, right there. And we'll see that it's still about 2.5% between the two, but when these two start falling apart, that's when we're going to start seeing the carry trade completely washing out. And we'll see a subsequent collapse between the dollar and the UN and the yen, unless the dollar is collapsing at the same rate as the yen. But with that, that's about all I've got today. And I don't think the yen would collapse; it would go up. But that's all I've got for today on this this video. That's just wanted to point out how the carry trade works, what it is, and how you can make better trading decisions with it. But I would watch shorting the USDJPY, the dollar versus the yen. Eventually, it may be a little bit early for that. I chased it in 2022 and lost a lot of money doing it. So it's don't recommend chasing the unwinding of the carry trade, but that is what a lot of people are saying on the internet these days. But that's what they're talking about. So with that, I'm going to let you go. You guys have a great one. If you like this video, then hit the like button and subscribe to the channel. And by all means, if you want to see more videos like this, then subscribe to the channel and keep an eye out for my daily Forex update and my weekly Forex look ahead. So you guys have a great one. Talk to you later. Bye.